Hi everybody, I'm Larry Sigel with Iowa School Finance Information Services. Welcome to this short informational video about how public school districts in the state of Iowa are funded and what those expenditures are spent on. We're going to talk today about powers and authorities, funds and revenues, this concept of spending authority, which is unique to Iowa public school districts, expenditures, other funds that are outside of the general fund, and financial health. Public school districts have restricted funding sources in Iowa. Not every dollar that a school district gets can be spent on anything that it wants to. This restriction comes out of both state and federal law, which specify allowable expenditures, even within a school district's general fund. And these can be further restricted by administrative rules, which are set by the State Department of Education, which can clarify state code even further. This funding diagram, which we use with school districts, helps show both where the revenues come from, what fund they're accounted for within public school districts, and where that those expenditures can be spent on. So for example, if we looked at a school district's general fund, you'll see that the revenues come from state aid, from property taxes, and from federal funds. And it will show you that the primary expenditures are going to be things like staff and benefits, and curriculum, and other expenditures that are accounted for within the general fund. While this is a highly simplified way of looking at the funding formula and with school districts, it is helpful for understanding that school districts do have restricted funding sources, and not every dollar can be spent anywhere a school district chooses. Let's talk about the general fund for a minute. There's some basic principles I want to hit here. Number one, it's a student-driven formula. The amount per student is set by the legislature through when they set the state supplementary assistance rate. Second one is that schools are budget limited, not property tax rate limited. So if tomorrow a school district magically found that its property value doubled, the property tax rate would fall, the school district wouldn't have any more money to spend. The third basic principle is that the tax rate is driven more by the formula than by district actions. Now, I don't want to say that school districts don't have any impact on their local property tax rate, but they do. But there are portions of their tax rate that are driven exclusively by the formula and just result in whatever property tax rate is driven by the formula. The last one we talked about already a little bit, that districts can only spend funds on allowable purposes. The chart on the screen right now shows you the funding sources for the school district. Now, it's popular conception is that public schools are funded primarily from property taxes, but that's not the case. School districts, majority of school districts funding, over 56% on average, comes from state aid, about 34% from local property taxes, and a little over 7% from federal funds and other sources. So the primary funder of school districts is state aid. Now, this amount of state aid has gone up over the last 20 or 30 years because of actions that the state has taken to lower the impact of property taxes on a school district's general funds. Let's talk about this concept of spending authority, which is unique to school districts. The state ultimately controls the max amount that school districts can spend. Why does the state care how much school districts spend? Let's get to the concept of equity. Before the finance formula was put into place in the early 1970s, school district spending was all over the board. Some districts spent a lot on a per-student basis. Some districts didn't spend very much. One of the purposes of the formula was to equalize educational opportunity. And to do that, they had to have a way to enforce the concept of equity so that some school districts just didn't go out and raise and spend a whole bunch on a per-student basis. So this concept of spending authority helps enforce this concept of equity by ensuring that every school district spends about the same amount per student. This restriction of spending authority only applies to a school district's general fund. Every other fund operates exactly the way you would think it would. If I've got a dollar, I can spend it. But school districts are required to account for two things in their general fund. They have to keep two sets of books if you want to think about it that way. They have to keep track of their spending authority set of books. The analogy I like to use when thinking about spending authority is it's a credit card limit, and it really is a way to separate the concept from it being cash. So when a student shows up on a school district's doorstep at the beginning of the fiscal year, they hand the school district a credit card, and it says this school district may expend up to $7,600 on this child's behalf. And that concept of that credit card is really important because that's the limitation. The other thing that the school districts have to account for is their fund balance. Sometimes people like to call it their cash set of books. So school districts are required really by law to keep two sets of books: their spending authority set of books and their fund balance, or you can think of it as their cash set of books. So where does the spending authority come from? Well, we talked about it a little bit already, right? How many students you have times that credit card limit per child is the total amount of current year spending authority. The number of children that we use in the formula is always a year behind. We always use the prior October 1 count for the school district's budget for the upcoming year. That cost or credit card limit per child is set by the legislature through the state supplementary assistance rate. That determines what that credit card limit is. And then the spending authority is then funded by a combination of state aid and property taxes. So the limit on spending for the school district in the general fund is not how much cash the district has in the bank, it's how much spending authority the school district has. Total spending authority for a year is the current year spending authority amount, that credit card limit times how many students they have, plus any previous year's unused or surplus spending authority is the legal limit on the total spending for a school district. Now I want to reconcile two concepts here: fund balance and unspent budget authority. Fund balance is an accounting concept which basically says if the district ceased to exist on June 30th of the fiscal year, took in all the money, all the cash it was owed, and paid out all its bills, it's what's left over. That corollary from a fund to fund balance from a spending authority perspective is our unspent budget authority. If a school district took in all the spending authority it was owed, subtracted all its expenditures for that year, the remaining amount would be the unused or unspent budget authority, sometimes termed unspent balance. Certain students have higher costs than others, and the formula makes an allowance for that by applying what we call a weighting. And a weighting is just simply counting a student at a value greater than 1 times that $7,600 credit card limit. So for example, special education has 3 weightings: 0.72, 1.21, and 2.74. These are all in addition to the 1.0 weighting that a student receives as part of their regular education program. So a level 3 special education student counts as 1 for regular ed and then 2.74 students for special ed for a total of 3.74 students times $7,600. And this generates additional resources for special education students. English language learner also has additional funding that's associated with it. Those students count at a value greater than 1 as well. School districts may also apply to the School Budget Review Committee for additional costs above those weightings. So what's the big deal with spending authority? It's illegal for a public school district to exceed its total spending authority. If you've ever heard of Russell or Farragut school districts, you won't anymore. Those districts were closed because they went through a Phase 2 financial viability audit. Now, how is this triggered? It's if a school district goes negative on its unspent budget authority for 2 consecutive years, the state board can close the school district down for being just financially not viable, not for any educational reasons. There's no local appeal process, and so it's really important as the single measure for school districts' financial health is to keep the unspent budget authority positive. Let's talk about some funding formula mechanics and valuations and tax rates. So if you've got a credit card, you've got to pay it off. How do you pay for spending authority in the general fund? There are 4 sources. 2 are property taxes and 2 are state aid. First thing we do is levy a $5.40 uniform property tax levy that just generates whatever it generates. The state then backfills up to 88.4% of that cost per pupil or that credit card limit. The additional property tax levy is a property tax which funds that final 11.6% of that cost per pupil. Now there's no rate limit on it, it adjusts automatically to fund as much as needed. And then the property tax replacement payment, which is the state amount which offsets some of the property tax which would have been formally funded by that additional property tax levy. Now we've got what I like to call the tale of 3 districts here. The height of each of these bars represents $7,600 or the funding for a single student. Now, we've got 3 districts here: a property poor district, a district that doesn't have much property valuation, an average valuation, and a property rich district. In that property poor district, that uniform levy doesn't generate much money. In the average valuation district, it generates more, and in that property rich district, it generates a whole bunch. State aid then backfills up to 88.4% of the cost per pupil. And then the additional levy funds through the property tax, $685 per student. Now, the $685, while it's the same on a per student basis, is going to take a higher tax rate in the property poorest district than it is in the property richer districts. The property tax replacement payment of $201 per student funds that final 11.6%. Now, the state aid is the gold area, so you can see that gold makes up the state aid and the property tax replacement payment, and property taxes make up through the uniform levy and the additional levy. So while property taxes are partially equalized under the formula, they're not fully equalized under the formula. We've got districts that have low valuation and high valuation in the district. The map at the top of the screen shows those districts' property valuation characteristics. Those areas that are in blue have high valuation per student. Those areas in white have lower property valuation per student. These equate to differing property tax rates. Those districts that have higher property valuations have lower property tax rates, which are denoted by the light blue areas. And those districts that have higher property tax rates in the bottom map are indicated by those districts that have darker blue areas or higher property tax rates. School district property tax rates have fallen over the last 15 or 20 years. Over the last decade, there's been a significant reduction in property tax rates. The highest property tax rates in school districts in the state have gone down by over 20%. The average valuation district has gone down by 11%, and even the very low property tax rate districts have seen a decline of about 2%. So property tax rates have declined for school districts over the last 15 years. Let's talk about some optional sources of authority in the general fund. We're going to talk about two of them. Number one is the instructional support levy. The first question is how much you want to raise that credit card limit up to an additional 10%. And the second question is how do you want to fund it? Property taxes or a combination of property taxes and income surtaxes. The ISL can be voter approved for up to 10 years or board approved for up to 5 years. All but one school district in the state utilized the instructional support levy to supplement their general fund funding. Dropout prevention is another way that school districts can supplement their funding. It's a maximum of 5% of the regular program district cost. Some districts are at 2.5% maximum. Other districts are at 5%. And alternatively, other districts are between 2.5% and 5%. It's funded or used for funding for services to dropouts or those that are at risk of dropping out. And it's recently seen expansions to include any at-risk purpose for at-risk students that are defined by the school board. But it is effectively funded by all property tax. Those are really the two major ways that school districts can increase the size of their general fund, and that's really the only areas that are available to them. Let's talk about some other formula mechanics here that are in the general fund. I want to talk about the cash reserve levy. It's only for the general fund, and there's no rate limit on the levy, but a school district is limited to levying cash reserve once its fund balance exceeds 20%. What's important to note about the cash reserve levy is it does not create spending authority. It only gives districts the cash to spend those resources. In other words, a school district can't just levy their way out of a spending authority problem. They actually have to make spending reductions. Let's talk about expenditures. Where does the money go in a school district's general fund? On average, 80% of the school district's funds go to pay for staff. The remaining 20% goes for everything else, whether that's curriculum, professional development, transportation, or whatever it is. And funds in the general fund are to be used for the educational program and not for physical infrastructure. We'll talk briefly about the other funds that are outside of the general fund. What's important to note about these non-general fund sources, we're going to step across this great divide, and most of the following funding sources cannot be used in the general fund and vice versa. So when school districts might have money in one of these sources, but you can't use it to offset a general fund shortfall. We'll talk briefly about these. These include the physical plant and equipment levy, which is made up of two sub-levies, the 33% per thousand all property tax board approved, that's just done as part of the school district's certified budget annually, and then the voter approved physical plant and equipment levy, which is a maximum of $1.34 per thousand of property tax. And the things that the physical plant and equipment levy or Pebble can be spent on are things like buildings, buses, technology, and equipment. We've got a debt service levy, which is a maximum of either $2.70 per thousand or $4.05 per thousand of all property tax. It's 20 years, and if you want to think about this as traditionally what we think of as a bond issue, it's funded primarily used for funding buildings and grounds. Our sales tax is a 1 cent statewide sales tax. It is distributed on a per student basis. It's about $1,100 per student, and this is valid through January 1st of 2051, so it runs for a long time. School districts are able to borrow against their sales tax, estimated sales tax proceeds. Another non-general fund resource is our management fund, which is a property tax levy that without a rate limit, but it funds things like property and casualty insurance, workers' comp, early retirement, and things like a local government risk pool. Last levy we're going to talk about is a levy that's been recently sunset, is the Public Education and Recreation Levy. It's a 13.5 cents per thousand property tax levy for public playgrounds, facilities, and community ed. Now, the legislature recently took the action of prohibiting any new votes on this, but for those about 30 districts that have an existing PERL, they're allowed to keep it. We'll talk briefly about financial health. When we talk about financial health, we focus primarily on the general fund. Why? Well, that's where we pay for the educational program out of. It's also the largest portion of the school expenditures. It's also the biggest risk. And why do I say that? Well, if a school district has problems with their nutrition fund, it's probably not going to be very newsworthy. If a school district has problems in their general fund, it is very much newsworthy. We also focus more on spending authority than on fund balance. Why? Well, negative spending authority can get you closed. We talked about the process of the School Budget Review Committee implementing a Phase 2 viability audit. Well, that is because of a school district's unspent budget authority goes negative. So negative spending authority can get you closed. Negative fund balance can be solved locally by levying local property taxes. We've got great resources that are available to school districts to help understand their financial position, whether it's our district snapshot out of our FACT tool, levy support, our comprehensive financial projection model, which is a 5-year projection model that allows long-term modeling of revenues, expenditures, and property tax and income surtax rates. We've got our interactive mapping tool, which is a great resource for seeing trends in data over the state. We've also got our webinars, which include our situation report and our special topic webinars and recordings. We've got a building block video series that's great, and our every other month 5x5 video series, and other school solutions that are tailored specifically to the needs of school districts. We're always here to help with any questions that you might have about public school funding in Iowa. Please don't hesitate to let us know. Thanks a lot for your attention today. We really appreciate it. Take care, everybody. Bye-bye.